Hey, I welcome you to this session on derivatives. Whatever we are going to learn today, whatever we are going to learn here today is going to be very important. It's most significant. Derivatives play a key role. Understanding derivatives, understanding instruments, understanding the trading secrets have a key role in what kind of trading practice you're going to have in your trading journey. Let me move take you ahead. What you actually, to start with, what do you mean by derivatives? As we all know, derivative is nothing but derived from something. There is an underlying, and then there is a source, and then something is derived out of it. I'll just give you a simple example. The aircraft is derivative of Falcon 20G. uh, so it's a derivative of that. This is a little complex, but in financial terms, it's an arrangement or product such as future, option, or warrant. Okay, the value derives from, it's dependent on the value of the underlying, such as commodity, currency, or security, which is nothing but equity. It can be anything. Derivatives is basically collectively spoken as the derivative market. This is just about the dictionary meaning. This is just about the dictionary meaning which I found from the Google. But let us try and understand what exactly is derivative. I'll give you a simple example. You go to a furniture shop, you actually find that there is a beautiful chair which is derived out of wooden planks. As you know, maybe wood, it is derived from wood. Now, here, I would like to tell you one difference. Now, if there is a change in pricing in wood, do you think equally or simultaneously will there be a change in price of that chair in the showroom particularly? Not really. It doesn't affect. For example, that there is a 20% or 30% change in the chair, in the plank prices, will not directly impact the particular chair which is already in the showroom. It won't change. Here I would like to modify and give you one more example of derivatives. Now we all know that sugar, which we all consume, is actually a derivative of sugar cane. It basically comes from sugar cane. Now, as I tell you that in the market, the procurement price or the price at which it is supplied to the market, if there is any variance in that price, will it have an effect on the end price? Yes, it will have directly on a day-to-day basis, on a real-time basis. Any change in the pricing of the underlying asset will have an effect on the end product which is available in the market. So this is exactly what happens in a derivative market. Even though the earlier example, chair is actually a derivative of the wooden plank, here it doesn't really respond with the pricing, whereas the sugar cane responds with sugar.